Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and a very happy Wednesday, every single one of you. In today's program, I want to do a brief sort of preview, obviously, of the Fed interest rate decision happening tonight, plus do a quick recap of a certain earnings report, which is expected today, and some recent US data, which has come out, which could anticipate tomorrow's US GDP reading. But before we get into that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, today I want to do a little bit of a Fed preview, which is happening tonight at 6 p.m. UTC. Now, basically, the market is assuming we're going to have another rate hike, and it's assuming that we're going to get 75 basic point rate hike, the same as previous. In fact, Goldman Sachs, one of the officials, they said some officials left 100 basic point rate hike on the table after the firm CPI number of 9.1% report last week. Let's face it, that was a shocking number. However, he also goes on to add that Goldman Sachs has put a pullback. They expect a pullback in inflation expectations. Seems to have persuaded the committee to stick to its original plan. So this is why he's expecting 75. He also added this, of course, which the market is already very frightened of. Already tightened enough to put the economy on a sufficiently low growth trajectory. So they've already said that. But anyway, it's not just Goldman Sachs who thinks or is expecting 75. The CME, the Chicago Merchant China Exchange Fed Watch tool, has put a probability of a 75.1%, which is a good number, I think, actually, 75.1% of a 75 basic point rate hike. They've also put their probability of 25.9% probability on the Fed being really aggressive and surprising the market and doing 100 basic point rate hike. Now, in my anticipation, in my personal opinion, and in my anticipation, I'm anticipating basically a 75 basic point rate hike. The reason why I say that, it is 75 is still pretty aggressive, and it still will help them on their target. Plus, like I mentioned this morning, the last time they surprised us, there was that article in the Wall Street Journal, which snuck out about a couple of days before the announcement, which sort of set us up to sort of think or to expect a 75 basic point when the market at that point was expecting a 50. So we've had nothing of that nature. But either way, if they do raise interest rates today, which we're all expecting by 75, whatever the number is, it will be the fourth interest rate hike this year. And the reason why they're doing this is obviously CPI, inflation, has risen at the fastest pace in 41 years. 41 years. And if they were to do the 75 basic point, that would bring interest rates in the United States up to 2.5%. And it hasn't been at that number since the summer 2019, and that was before the coronavirus pandemic. So here's the thing. At the moment, the market is expecting 75. That's what we're all expecting. Like I said, I'd be greatly surprised if they called us out and did something higher or even lower. But anyway, now what the market is trying to anticipate is the Fed interest rate cycle. What do I mean by that? As in, what are they going to do next? Are they going to, what's the next decision going to be? And the decision after that? And when will they put a pause on raising interest rates? Because don't forget, the market is really petrified that with this fast growth in interest rates, the market simply won't be able to handle it, and it will eventually push us all into a recession. So really, the market is more obsessed with at the moment the Fed interest rate hike, or the Fed interest rate cycle, shall I say? And I think this is why possibly, though the interest rate decision will be exciting or should be exciting, and I will do, like I said, I'll do a special on that. And I'll tell you a little bit more about that in a little while. I think the statement which comes out at the same time and the press conference which comes out 30 minutes later, or is the press conference does 30 minutes later after the announcement, the market will watch more carefully because they're trying to predict what the Fed's going to do, not tonight, but next, and when the Fed may pause on their interest rate hikes. Now, for September, the CME Fed Watch tool currently calculates the following: 49.6 probability of a 50 basic point rate hike in September, and a 42% probability of a 75 basic point rate hike in September. Deutsche Bank has actually come out and they've said Deutsche Bank predicts 50 basic points in September and November. So 50 basic point rate hike September and November, then a slowdown in hikes of a 25 basic point hike in December. So there we go. So this is what I think. This is why I think, because the market's now trying to double guess what they're going to do next. This is why I think the statement and the press conference may cause more volatility than the actual interest rate decision itself. So that'd be something which would be worth keeping an eye on, definitely. But either way, the market's counting down to this event. It is a big event. Don't forget, it happens at 6 p.m. UTC. So remember, fortune favors the prepared. So yeah, be ready for that. On other news, don't forget, Meta. You tell I'm in trading. Meta, in other words, Facebook, are expected to announce their earnings after the market closed later today. Now, earning expectation for Facebook is supposed to be, or expected, around 28.94 billion. The previous earnings, was 27.91 billion versus 28 billion expected, which is pretty disappointing. However, don't forget, there's a lot of pressure on Facebook today because don't forget, we had Twitter. Their earnings were 118 billion versus 132 billion. Very disappointing. Snap Incorporated, very disappointing. 1.11 billion versus 1.14 billion. Now, both these companies, obviously, like Facebook, rely heavily on online advertising. So will Facebook follow Twitter or Snap? But the other thing is, don't forget, Google or Alphabet actually surprised the market. And we'll have a look at how Google's opened in a minute. Surprised the market because they rely also on online advertising. It's not the whole business model is online advertising, like Twitter and Snapchat. They obviously have many, many other services. But their ad revenue for Q2 was 56.29 billion versus 56.14 billion expected. So it was actually better than expected. So will Facebook do a Google, or will it do a Twitter or a Snap? So that'd be something we'll have to keep a very close eye on. So let's have a quick look actually at the market as it stands. Let's have a quick look. So obviously Microsoft had its earnings yesterday as well. And it was okay. It was slightly mixed. The markets took a bit of a bullish momentum on it though, because basically Microsoft earnings was lower than anticipated. But however, they also listed the reasons, current economic reasons for it. But either way, it's opened higher. As you can see here, it's got quite a gap where it closed yesterday around $251. It's now currently trading $254. But if we have a look at Alphabet, Google, in other words, Google, have a look at Google as well. They opened up again with a very, very big gap because, like I say, their earnings were very surprising. It was down 30. It was up 13% this year, but it's not as good as last year, which was 62%. But still, the market has looked at this quite favorably. It's opened with a big gap. Currently, it was close to $104, but it's now shot up. It's currently trading at $110.07 per share. So yeah, so say markets got quite optimistic with Google, and I wonder what Facebook will do on the back of its earnings due later today. Let's have a quick look at a couple other things as well. Euro currently, like I say, again, they are sort of waiting for the Fed interest rate decision. Like I said, it's been fairly sideways majority of the day, currently trading 1.0 through 1354, which is fairly to be expected. The cable, again, it's very sideways as well, currently 1.2043, but still above that key level of interest, 1.20034. The S&P 500, how that's currently looking, been sideways most the majority of the day. 3,963 points it currently trade at. And I'm guessing, okay, like most things, it is waiting indeed for the FOMC tonight. Sorry, my throat gets so dry. On other news, what else we've had come out? And this is an interesting question. We had US durable goods was announced about an hour and 15 minutes ago. It came in at 1.9% versus negative 0.4% expected, so better than expected. So now the market is expecting this to be an improvement on, or could potentially affect, the US GDP, which is due tomorrow. Now, obviously, I'll be doing a special on this. I will be doing a watch along on this event because I do think, like I say, it's going to be a key event. Though the expectation is for it to come out positive, there is a lot of other banks and a lot of analysts out there expecting it to be negative. Okay, and actually point to technically a recession or a technical recession. Like I said, I will do a lot watch along with this. I'll be going live tomorrow at 12:20 p.m., 10 minutes before the announcement. So please come and join me for that. And let's see if our pessimism is correct. So that will be quite a major event. So please come along and join me for that. Like I say, 12:20 p.m. UTC. Like I say, with the US durable goods being slightly better, will that mean the US GDP will beat expectations? Let's find out together. On other events coming up, of course, we've got US durable goods we've had today. Fed interest rate decision later tonight. Fed monetary statement. Like I said, I think the market's going to be looking at for potential forward guidance in the future. And obviously the press conference as well. German CPI, US GDP, which I said I'm going to do a watch along. German GDP, EU GDP, and EU CPI. That I'll do a watch along as well. Don't forget as well, earnings wise, Meta later today, Apple tomorrow, and Amazon tomorrow. Don't forget, Walmart yesterday scared the market, saying they were struggling, obviously, with their retail sales. Looking forward to the watch along. Pleased to hear it. Thank you. I'm glad. I hope you can join me. What was I going to say? Yeah. So obviously, Walmart disappointed the market quite dramatically. Will Amazon do the same? So we need to watch that very, very closely. And that leads me on to something a little bit special, which I'm doing tonight. It's a bit different. And I'm going to cover the Fed interest rate decision tonight. I am going to cover it. It's not going to be like a proper watch along, which I usually do from the studio. Because obviously this is a late night event. Well, late night event for me. But I still really want to monitor it and look at it. So I'm going to do a sort of tixee live, but sort of tixee live from home. And I will cover the interest rate decision, see what happens, what comes out. Try and also at the same time read the statement and see what that means or what that can potentially impact the market. So please come along and join me, and you will be able to ask me questions live on air as we watch it together. So do bear that in mind. So please come along. It'd be quite interesting to watch, I think. Okay. So what else? Markets. As the markets currently stand, the FTSE currently trading at 0.66%. DAX currently trading at 0.61%. Eurostoxx 50 currently trading at 0.77%. So again, like I say, pretty sideways, not bearish, not bullish, just range-bound majority-wise, which makes sense because this is what happens when you have a big key market event on the horizon. The market basically holds its breath in anticipation and waits to decides to make its move. So anyway, let's see. Like I say, don't forget that was special tonight. Please come along and join me. Like I say, it's not going to be normal because I'm not going to be in my studio, so I won't be able to show charts, but we can talk about the markets and how the market reacts at the same time. So that will still be just as exciting, I think. So please come and join me because this is a key event today. Now, don't forget, you can ask me questions anytime you wish. This is what I'm here for, and this is tixee Live. And live does, of course, mean live. So please feel free. Oh, I see what you mean. Yes, actually, to be fair, this is a great question. I'm really excited to see what happens to the euro as well on the announcement on Friday. The EU GDP, yeah, in some ways, but it's actually EU CPI I'm more interested in. And I'll tell you that because, and that's why I'm going to do a watch along on that event. I will discuss the GDP, of course, but I'm more focused on the CPI. It's because he's got record inflation at the moment, and obviously the ECB is seemed to be, though they raised interest rates by 50 basis points last week. And they're now saying data-driven their decisions, and they're no longer doing forward guidance. I just have a feel that the market is quite, doesn't expect a lot from the ECB because they haven't been aggressive. They've been really slow in reacting. And I think if we have a high CPI number, I think that can cause a lot of volatility for the euro, potentially put euro under a lot of pressure, because I think the general consensus is that ECB lacks action and lacks direction. And that CPI number, if it does come in extremely high, like we anticipate, then that could really put pressure on the single currency. But a very good question. Very good question. Is there any other questions? Anybody else like to ask me anything else at all? No? But again, okay, thank you very much for the contribution, though. I really appreciate it. And thank you very much, everybody, for watching. Like I always say, if you're watching me on Facebook and you enjoyed this little episode, give us a follow. If you're watching me on YouTube and you found this video interesting and helpful, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and you put up with me and my over-the-top enthusiasm in relations to the markets, which I can't help because I love the markets, give me one of those. I can see I've got a couple of likes already, which I really appreciate because I like to know if you like what I do. Anyway, till next time, which will be, of course, tonight to at 5:50 p.m. UTC. So tonight, we do that special on the Fed interest rate decision. Don't forget, I'm back online tomorrow as well at 8 a.m. UTC for the watch along at 12:20 p.m. UTC and 1:30 p.m., maybe a bit later than that, for the US session as well. So anyway, till then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.